All right, what is happening, crypto fans? Get ready, because the news cycle is absolutely on fire, and we've got the hottest updates hitting your screen right now on Bitcoin Bulletin. You do not want to miss what's unfolding. We're diving deep into market movements, big player strategies, and innovations that could reshape your entire crypto portfolio. From institutional shifts to groundbreaking product launches, the pace is relentless, and we're here to break it all down for you. So buckle up, because you're about to get the unmissable intel that everyone will be talking about. Let's get into it. Don't forget to smash that like button, subscribe, and ring the notification bell so you never miss an update. A surprising Treasury move shakes up the market. In a development that's turning heads across the financial world, a significant player has just revealed a substantial investment in Bitcoin, signaling a bold new direction in Treasury management strategies. This isn't just about dipping a toe in. It's a strategic allocation that raises questions about diversification and the growing acceptance of digital assets within traditional corporate structures. The move comes at a time when institutional interest in cryptocurrencies continues to surge, driven by the potential for uncorrelated returns and a hedge against traditional market volatility. As more companies explore ways to optimize their balance sheets and seek out new avenues for growth, this particular investment stands out for its scale and the implications it holds for the broader market. It suggests a growing comfort level with holding digital assets not just as a speculative play, but as a core component of financial planning. The details of this treasury management strategy are intricate, involving a notable stake in a high-profile financial product that has recently seen unprecedented inflows. This has not only sparked discussions about the company's financial future, but also about the evolving landscape of corporate finance itself. The company's leadership has been vocal about their approach, emphasizing diversification and a long-term vision, which contrasts with more aggressive, crypto-centric strategies seen elsewhere. The sheer size of the treasury and the specific nature of this investment are prompting analysts and investors alike to reevaluate the traditional playbook for managing corporate assets. This is a story about strategic diversification, market signaling, and the increasing integration of digital assets into the heart of corporate finance, potentially setting a new precedent for how businesses approach their financial reserves in an increasingly digital world. The implications for both the traditional financial markets and the cryptocurrency space are significant, hinting at further institutional adoption and a potential reevaluation of asset allocation strategies across the board. This move underscores a broader trend where traditional companies are no longer on the sidelines, but are actively participating in and shaping the digital asset ecosystem, leveraging new financial instruments to their advantage. Audience impact. This disclosure has ignited a firestorm of discussion online, with market watchers debating the long-term implications for corporate treasury strategies and the crypto market's institutional appeal. But that's just the beginning of the seismic shifts we're tracking. Next up, find out how a design giant's Bitcoin stake is causing quite a stir, even as they grapple with their own valuation challenges. Design software giant makes bold Bitcoin move amidst valuation jitters. In a move that has captured the attention of both the tech and crypto worlds, a leading design software company has disclosed a significant stake in a Bitcoin exchange-traded fund, sending ripples through its investor base and sparking intense debate about its financial strategy. This revelation comes as the company navigates a complex market environment, balancing impressive revenue growth with persistent valuation concerns and the pressures of integrating cutting-edge AI technologies. The $91 million investment in a Bitcoin ETF, representing a notable portion of its $1.6 billion treasury, is being framed by the company's leadership not as a pivot to becoming a crypto-centric entity, but as a calculated step in a broader, diversified liquidity strategy. This distinction is crucial, as it separates the company from the more aggressive, crypto-heavy approaches seen in other publicly traded firms. The company's chief financial officer clarified that while the Bitcoin ETF stake is part of their treasury management, the core identity remains that of a design-focused business. aiming to distance themselves from the volatility and speculative nature often associated with direct cryptocurrency holdings. This strategic positioning is particularly interesting given the company's recent history, including the collapse of a major acquisition deal and its subsequent push for continued expansion and user growth. Despite achieving over 13 million monthly active users and 450,000 paying customers, the market's reaction to its latest earnings report was far from uniformly positive. While revenue saw a substantial 41% year-over-year increase to $249.6 million, surpassing expectations, it wasn't enough to quell anxieties about the company's lofty valuation. Analysts have pointed to a 31.6x 2026 enterprise value-to-sales ratio as a significant premium compared to industry peers, raising questions about the sustainability of its current market capitalization. Adding to the complexity, the company has warned of potential margin compression stemming from its ambitious AI product rollouts, such as Figma Make and Dev Mode, which are expected to increase operational costs related to inference. This has led to sharp drops in stock value following earnings calls, highlighting investor skepticism about the long-term profitability amidst rapid technological expansion. Management has emphasized a cautious approach to mergers and acquisitions, maintaining a high bar for significant deals, a stance that contrasts with the aggressive Treasury allocations seen in crypto-focused companies. The Bitcoin ETF investment, therefore, appears to be a measured move within this broader context of careful financial planning, diversification, and a focus on core business growth, all while attempting to manage market expectations regarding valuation and future profitability in an increasingly AI-driven landscape. Audience impact. Investors are scrutinizing Figma's valuation and AI strategy following the Bitcoin ETF disclosure, with stock performance reflecting mixed sentiment. But the world of digital assets isn't just about corporate treasuries, it's also about expanding access and innovation. Get ready to hear about the latest ETP launches hitting a major European exchange. European Exchange welcomes a suite of new digital asset ETPs. In a significant stride for digital asset accessibility in Europe, a prominent asset management firm has successfully launched a comprehensive suite of exchange-traded products, ETPs, on the prestigious SIX Swiss exchange. This expansion marks a pivotal moment, offering investors a regulated and streamlined way to gain exposure to some of the most sought-after digital currencies, including Bitcoin, Ethereum, Solana, and XRP, alongside innovative staking and index products. The move underscores Switzerland's strategic position as a global hub for digital assets, bolstered by its clear regulatory framework and increasing corporate adoption of cryptocurrencies. Bitwise Asset Management, the firm behind these new offerings, has confirmed the listing of its Bitwise Core Bitcoin ETP, Ethereum Staking ETP, Solana Staking ETP, and Physical XRP ETP. These products are fully backed by the underlying digital assets, ensuring a direct link to market performance, and are designed for seamless integration into traditional brokerage portfolios. The inclusion of staking ETPs for Ethereum and Solana represents a notable innovation, allowing investors to potentially earn yield on their holdings through a regulated financial product. Furthermore, the launch of an MSCI Digital Assets Top 20 Capped Index ETP provides a diversified exposure to the leading digital assets. This expansion is a key component of Bitwise's long-term European strategy, which has seen remarkable growth, with client assets soaring to over $15 billion across 40 products, a staggering 200% increase since October 2024. The timing of this launch is particularly relevant, coinciding with a global environment marked by geopolitical uncertainties, trade tensions, and economic fragilities, driving a growing demand for diversification and alternative investment vehicles. As top economies like the UK ease retail access to crypto-backed financial instruments and France finalizes new crypto asset reporting rules, the continent is witnessing a clear momentum shift towards regulated crypto investment options. Ronald Richter, Regional Director Investment Strategy at Bitwise Europe, expressed enthusiasm, stating that these products will broaden options for investors seeking to benefit from the full potential of crypto markets, emphasizing the exchange's respected status and the introduction of new features like staking and index products. Bradley Duke, head of Europe at Bitwise, further elaborated on the strategic fit, highlighting the company's commitment to providing best-in-class ETPs with institutional-grade custody, physical redemption mechanisms, and transparent methodologies that comply with stringent regulatory standards. This move not only enhances investment opportunities for European investors, but also reinforces the growing maturity and institutionalization of the digital asset market, paving the way for broader adoption and innovation within the regulated financial landscape. Audience impact. The launch is being hailed as a major win for European investors seeking regulated access to a wider range of digital assets, including staking and index products. Now, let's shift gears to the monumental price predictions hitting the crypto sphere. Prepare for some mind-blowing forecasts about Bitcoin's potential trajectory. Bitcoin's meteoric rise, a $125K target amidst unprecedented Treasury inflows. In a development that has sent waves of optimism through the cryptocurrency community, analysts are projecting an astonishing price target for Bitcoin, suggesting it could reach a staggering $125,000. This bold prediction is underpinned by a significant surge in Treasury inflows into Bitcoin, indicating a powerful wave of institutional and strategic investment that is fundamentally altering the supply-demand dynamics of the digital asset. The narrative surrounding Bitcoin has increasingly shifted from speculative retail trading to a more robust institutional adoption framework, fueled by the successful launch and sustained performance of Bitcoin exchange-traded funds, ETFs. These ETFs have become a critical conduit for traditional capital to enter the Bitcoin market, and the continuous, substantial inflows observed in recent periods are directly contributing to the upward price pressure. This isn't merely a cyclical uptick. It represents a structural shift in how major financial players are allocating capital. The consistent demand from these entities, coupled with a relatively fixed supply of Bitcoin, creates a potent recipe for significant price appreciation. Analysts point to the halving events, which reduce the rate of new Bitcoin creation, as a historical catalyst for bull runs, but the current environment is characterized by an even stronger confluence of factors. The growing acceptance of Bitcoin as a store of value, akin to digital gold, is being reinforced by macroeconomic conditions such as inflation concerns and geopolitical instability, driving investors to seek assets that offer perceived safety and long-term growth potential. Furthermore, the increasing integration of Bitcoin into mainstream financial services, including payment systems and investment portfolios, is normalizing its role and expanding its utility. This broader acceptance is creating a virtuous cycle, where increased adoption leads to greater legitimacy, which in turn attracts more capital and further price discovery. The $125,000 target, while ambitious, is grounded in models that account for projected inflows, reduced new supply, and the increasing digital gold narrative. The strategic case for holding Bitcoin within corporate treasuries is strengthening, as companies look to diversify their reserves and potentially hedge against currency devaluation. This shift is creating a powerful demand shock that could propel Bitcoin prices to new all-time highs. The market is closely watching these treasury inflows and ETF performance metrics, as they are seen as key indicators of the institutional commitment to Bitcoin, suggesting that the current bull run has substantial room to grow, driven by fundamental demand rather than just speculative hype. This sustained institutional interest and the strategic integration of Bitcoin into diverse financial strategies are shaping a new era for the cryptocurrency, potentially validating the most bullish price predictions. Audience impact. The $125,000 price target for Bitcoin is generating immense excitement and debate among investors, fueling speculation about the future trajectory of the market. And that's a wrap on today's top stories. Stay tuned for a quick recap and your essential call to action. That's all the essential intel you need to stay ahead of the curve. Don't forget to hit that like button, subscribe to Bitcoin Bulletin for daily updates, and ring the notification bell so you never miss a beat. Follow us on all social media platforms for more insights and join the conversation in the comments below. We'll see you in the next one.